Alrighty, good afternoon everybody and welcome to Gary's Traders Group. This is your host, Gary Humeski. It is Monday, November the 24th. It is the week of Thanksgiving. So let's jump right into it and get through the disclaimer. This webinar is for educational purposes only. I'm not giving any trading advice whatsoever. Trading does involve risk. These webinars are designed to aid and educate you and help in decision-making processes. Alrighty, let's get rid of that. How did everybody turn out last week? How did you guys do? Good morning, Tom. Yeah, I guess it is still morning for you, huh? How did you guys do last week? I think I did really well on my choices. When I think back on, I was looking at the various trades that were listed. We looked at lows. Anybody tell me, raise your hand or whatever chat that you took the lows trade. Anybody do that on the earnings? That was a good call because, we were looking at Home Depot first to see what was going to happen. And, historically and seasonally, Home Depot doesn't do that great from a seasonal perspective. Now, I've changed this, guys, so be careful. It's not going to look like what yours. I've changed it from April to April so I can see the crossover from December to June. You guys should be doing that if you're going to be using the best choice seasonality. You can do that on tab 1 on the left side. Just switch your start month to April. Just so something you can be able to see the historical price transition from December to January instead of it just ending over here on the right side with December. So here's the earnings on HD, and it's an 80% winner, which this year it wasn't necessarily that the consumer doesn't take a pop is what we look for. We look for a pop and a gap on an earnings, and this just doesn't historically do that. Of course, I don't necessarily use just best choice, folks, and you shouldn't as well. The seasonal composite is really not designed to identify specific overnight earnings trades where there's a gap from one day to the next. You really need to do that off of your TOS charting. In other words, just go to your charts and use at least like a 4 or 5 year history. And then just highlight the areas, like if you're looking for third quarter, this is the third quarter here. You can just highlight that area. You can see whether they went up or down. Like this particular company, I was looking actually for calendar spreads for some of the people that like that. And Bob, I didn't find many either, so don't feel bad. I ran a whole new list. I looked at Jack. I didn't like Jack, J-C-K. I'll go over that in a minute. But anyways, back to this, folks. This is what you really need to look at on a 5-year history if you want to see, really what is something doing on an earnings trade. Like for HD, I know this is earnings time. I can highlight this area, and there's earnings right here. And, of course, you can see they beat the EPS. Their sales was good, but the consumer just doesn't seem to be excited about them when they report earnings. So anyways, this is what you guys need to do. Sorry, I needed to also look at my chat box. It's one thing I wasn't doing, so I need to move this thing over a little bit so I can see it on my other screen. Okay, some people took advantage of lows. That's good. That's good. GameStop, GME. Anybody take advantage of GME? GME, I think, did not do so good. Didn't list GME. I thank God for that. So I think there was something I didn't like about it. Or did I list it before I put my foot in my mouth? Nope, I didn't. Good. No, I was just thinking last week when I was going over all the different trades. Smuckers didn't do that great on earnings. SJM. This is their earnings. They're kind of flat. Didn't do much. TFM was the only other earnings, and they were pretty flat as well. I mean, they did pull down hard, but they seemed to be flat. So, Fresh Market's a great company too. But I look back in the other ones, CP, TSN, DEC. I think anybody get into DEC? DEC's been doing real good. If anybody got into DEC, this was on the 17th, so that would have been right here on this day is when I talked about it. So you could have got in here and enjoyed that little run, and it's going to continue going. DEC is still a trade. This is just a Fibonacci extension I did from the, when you do an extension, you got to look at a trend up and then a pullback, and then it'll extend it out. You can do it on any. You could do it on this. You could do it on this. You can even do a little one like this. I tend to look at the macro picture, though, to really see where things take off to. The other thing, if you're going to do Fibonacci, I know I'm bouncing here a little bit, but follow with me. I do that sometimes, is the other most common targets that people look for to take profits is the 132.2 and the 161.8, this being the biggest of the two. The last one is the 200. I don't know if this was on here. I don't think it is. You can set these as well. Like I do have the 200. I guess it's not showing. It must be way the heck up there. But you can set these. These are not the default, but this is what I've set it at. And so you know what the most common spots are for people to look at taking profits, and so that way you're in sync with the market. Okay, let's take a look at the macro picture real quick and see what happened, see what's happening. Everything's still rosy. Like I was sharing with you guys, I believe this market is going to continue to run. I'm going to reiterate this again. I believe the S&P is going to take a run for 2100 by the end of the year. There's nothing stopping it right now as far as any resistance. I believe the NASDAQ is also going to take a run to 4800. If I did an extension on the Dow, the 161 would be 1900 would be the, I don't know if it's going to shoot for that by the end of the year, but if it continues being bullish into the new year, after some pullback, that's probably one of the major resistance points where people are going to take money off the table, corporations, hedge funds, everything else. They're going to be taking some profits. Now, I didn't do the middle one, which I could have. See how this is the default here, guys. This is what is the default. I like to change this to 1.382. I like to change this to 1.618, and I like to change this to 2. So that adds in this next potential resistance areas, 16,610, okay? So keep those in mind. So that's the macro picture right now on the entire market. Everything's still rosy. The other thing I suggested last time, and I suggest this every year, is to, you can always trade the SPYs, folks. Everybody know what the SPY is? Yes, no? Folks, you know what the SPY is, SPY? Bottom line, it's the ETF, everybody, on the S&P. It's a highly traded security. I think I read a statistics about how everybody's leaning towards ETF, which is affecting how the entire market moves now. I think something like 40 plus% of the entire market trades only ETFs, which is a huge, huge part of it. I mean, if you ever look at the SPYs as far as volume goes, you're always going to see incredible, volume and open interest on either side, So, but one of the things you can do is you can play the SPYs right before Thanksgiving. It's a typical pop that'll happen. It's historically happened all the time, right before a holiday, before 4th of July, Thanksgiving. Those two specific holidays seem to work very, very well. So, if you're going to trade the SPYs, I wouldn't necessarily trade the weeklies. I'd still trade the monthlies. Just make a little bit of money. Don't go too far out. If we were looking at the SPYs right now, it's looking really, really rosy, folks. Nothing is really telling me to get out of this right now. Yeah, this is showing overbought and the DPO is crossed, but you see it's curved over. I've seen this kind of setup before where it looks like this particular indicator is a very powerful indicator, is telling me to, be cautious, and this thing is overbought and it's going to pull back. But I also have to be conscious of what time of year it is. And of course, we do have the advantage of having asterisk SPX. You can put through best choice, and you can. This is just, I think, 10 years worth of history, a little bit more. 12. Even if you just used, let's use best profit and highlight this area from November into December, and then let go. You've got an extremely high probability of 92.31% between now and the end of the year. The S&P just continues to rock, even though you'd say, well, gosh, it's sitting way up here. But folks, remember something. The Dow crashed in 08. We almost had, economic Armageddon. And because of TARP money, starting in March the 6th, March the 9th, we were down at almost 6,500 on the Dow, and where are we at? Almost 17,000 plus. So in lieu of the fact that all the money that the government has dumped in, even though QE is stopped, this market's going to continue to move, even though we have a diversity in politics right now. From what I understand, this is going to be the worst Senate in the history, and the House in the history of American politics. They won't do anything, in other words. They'll be filibustering each other, and there'll just be deadlock between now and when Obama terms ends in a couple of years. So I don't expect any major huge changes to come about. But look at this, folks. That's big moves. So it gives you the confidence to trade the SPY coming into the holiday. Again, play close to the money. You see there's a tremendous amount of volume today. 16,000 contracts were bought at the money. That's 1%, folks, of a $207 premium for the security. Got a 51 delta. Thing pops up a little bit, you could make a little bit of money and then just take it off the table. Alrighty. Went through a lot of stocks. One more thing. Let's take a look at the VIX just so we can see what the comparison is. This is the yearly low, and this is the yearly high. So we're just meandering sideways. Very typical. Looks like the 49 is just wanting to start getting layered on top of the 89 EMA, which is very typical. It's just going to mush sideways. And again, this is the chart we just looked at. The S&P continuing to stretch to the 2100 by the end of the year. So everything looks the same. And yes, it would be ideal to correlate, this sitting up here, but we've had a big, huge run. So this was going to oscillate. This is an oscillator, so it's going to move up and down. Doesn't mean the market's going to necessarily react to that. Like I say, let's be conscious of the overall picture. Alrighty, let's move on. Earnings. Only earnings I see coming up that I potentially like is Deere. I went through all the earnings, and it wasn't a lot, folks. Copy-pasted from what does it say? I copy-pasted from FinViz, and these are the only ones I saw. I looked at each one of these from a seasonal standpoint. This doesn't exist in our database, neither does this. Oops, I pulled up the chart. CPRT was the only other one I thought, or C-Trip, I'm sorry, may have some legs to it. You got 9 analysts on a strong buy. They're giving a target of 72, 71 in that area. So if you look at some of the charts on CTRP, well, let's first look at seasonally, and that's one of the things that didn't really excite me. CTRP. Here's the area that we're in. Best profit, I couldn't even find necessarily something. I have a short till about this time of the year historically, and I can't even find a pull-up again until December. And it's, you know, when I have blue lines in the bottom and blue lines on top of the composite, it tells me it's kind of mishmash all over the place. If we went just to charting, say, well, what's it look like on the charts? Yeah, there's an argument to say it could run back up, even though we have a trend that's down on a 6-month. There is an argument to say, if I did Fibonacci retracements, 100% would be 69.89 CTRP. And there's some people loading up at the 60s for December as well as January. This has got a stronger delta of 49, of course. But we're really only looking for a temporary move, so I don't know if you necessarily want to buy that much time and spend 370. Now, what you could do, which could protect yourself a little bit, is you could buy that for $3.70, but say, wow, wait a second, I don't want to pay that much. So I can turn around and then sell this to offset my costs. There's a huge amount of liquidity there for me. So I just press Control and click that. So now I'm into that trade for 95 cents, folks. That's cheap. Okay, I'm going to bounce to a question here. One of our members asked, when do I put fibs and what time period do I use when I'm looking only at 1 or 2 months? As far as a 1 or 2 month trade, I'm still going to look between a 6-month bob and a 1 year. 3 months is not indicative. Fibonacci is more of a larger move for me, and I'm looking for a longer time frame for an extension part when I'm doing the Fibonacci extensions, not for retracements. Retracements is simply the high to the low, and I'm going to do it on a 6-month period. But if I'm looking at, hey, it went all the way up here, where could it potentially continue to go? So then I'll maybe look at a longer time frame. See, now there's a different picture, folks, right? Now I have a trend that's actually moving up. So what I could do here is say, there's the low. Oops, let me make sure this is set at extensions. There's the low. There's the high. And I can bring it back down to here. So now a 61.8, and now I guess I can squeeze this in so you guys can see this better. Now a 61.8 retracement, which is a huge resistance point on Fibonacci's cycles, is $70.66, which is where there are people in January loading up here for very inexpensive. For 95 cents, you see some good open interest here. So on an extension, I'm going to use a little, and this will also say, well, where could historically after this, it's busted the top of linear regression, we have no idea where it could potentially go to. That's the next stop. And that's why I'm going to use the extensions from the low to the high. The whole purpose of Fibonacci extensions is to visually, there is no rhyme to reason for this, folks. This is just visually looking at a trend. Now, I could have done this. You know, I'm looking for the trend up, and then where did it retrace to? Okay, so this was a whole move here. It was above the 49. Then it retraced back. So I could do the extensions here and say, where is it going to extend from 69 forward rather than all the way in the low? Oh, another thing, folks, so you don't have to move your cursor and then have to go and edit. You can go to Style, Settings, and change your snap drawing to OHLC, because defaultly it's set at none, which means wherever you put your cursor is where it's going to read that particular bar. But if you set it to OHLC, open, high, low, close, then, and you're using extensions, all I have to do is put it close to there, and it's automatically going to find that low. And automatically, in other words, it's going to find everything I'm looking for. So there's the 61.8 if I used these instead. So 100% extension would be 75.35. The next would be 85. The next would be 91. Because remember, folks, if this thing continues the way it's moving, you have no clue of where is it going to stop and where we're going to take profits. Bob, you experienced this one time on Trading MasterCard when you took the earnings. Remember? And you were saying, gosh, you know, where do I take my money? This thing just continues to reach to the sky. One of the things you did use is this charting setup, which is extremely helpful. Another tool that you can add to that as well if you're buying more time, again, these things are for when you buy more time, is the Fibonacci extensions, which are really, really good. So C-Trip, I didn't list it, folks. I think that's the reason was that it was coming out with earnings tomorrow. Well, no, it's tomorrow after market. Now, see, now this is crazy. I looked up NASDAQ for C-Trip, and they told me where is that? C-Trip's earnings. Gosh darn it. Okay, it is the 25th, though. That's verified. Okay. So it is tomorrow after market. The only concern I had, of course, is seasonality. And I really could not. Now I'm going to hit the puzzle piece just to make sure that there isn't some bad data that I had gotten. Yeah, I can't seem to find any seasonality here. I see that long, but it's not until December. So if you wanted to see where is it in its historical movement, yeah, kind of in the middle. I mean, so you got a 50-50. It's going to go up or down. You know, you could rely a little bit more on what other economists are saying. You know, Earnings Whisper is not a bad one. CTRP. Again, they've got a strong buy at 72. All right, I don't want to belabor this. Do you guys want me to list this one or not? Yes, no? Somebody speak. Speak so I know. No? Okay. Then we're not going to do it. All right, moving on. Didn't see any shorts. Let's go through a plethora of seasonal longs, though, and I'll try to whip through these as quick as possible. Please stop me if you have any questions. I will start out with seasonality first, the first stock being AGN. Allegran. I think that's the way it's pronounced. From November up, it's a 90% winner. I think there's actually, I just ran this list today. These are all 100% moves with at least a 10% move or greater. So the best way for me to find this one, where was Allegran? I think it was the first one I had. AG. This may have been on another list of mine. It looks like it is. Let's go to Gary stock list, is it? Nope. Okay, I found it someplace and run one of those lists. Oh, there it is. That's, if you don't remember what list it is, just go to tab 3, and it's I kept the best 100 stocks year to date and decided to run them through the Cycle Wizard and see if it found us any decent looking trades. ETS largest. Oh, there it is. November. There it is. AGN. Okay. Nice consistency in point and percentage movement. 10 out of 10. So then I went to charting. Six-month time frame. Took a nice pop here. I don't know what that's from because all this is a dividend release. But it's got a nice trend looking up. The 49 is above the 89. It's got a nice roll going up. See how the leashing effect pulled the stock away, pulls back down to the 49. Sometimes it goes to the 89, but these act as really great support levels that stocks can retrace to and then continue their trend upwards. I put in Fibonacci's already on this of where it could potentially go to. And there's the first one, 225 at 138.2 potential extension. Now, if I add in probability cone, which is another tool I like to use, you guys should be doing this as well. This gives you a target, another target to shoot for. You'll see the 138 lines up very closely to the probability cone of 125 or 225 on December and the 138.2 at 225. And of course the 161.8 is 235. So I would say conservatively we could look at, to buy some time, because we don't know if this is going to just shoot right up there by December, but rather look at January's, buying some time, and then look at the 225s. So if we look at the 225s, there's good volume or good open interest, 1,100 contracts. Not real froggy about 0.19, but that's close enough to my minimum of 0.20. And that's inexpensive, folks. Every single pick that I had in my chart you're going to see is under $2. So I think you guys would be pleased to be able to try to look through that and find some good ones. Some people will notice and say, well, gosh, Gary, what about the short interest? Yeah, we have just as much long interest as well on this. And with a chart that looks like this, matter of fact, I'll even extend this out to a year. I mean, look at this, folks. See that 49? It's just continuing above this. And so what some of you should gather from looking at these charts, which is another style of trading if you want to buy more time and not be so pressured to take money off the table and watch charts all the time, you can have this setup of a 49 EMA, 89 EMA, and as long as price stays above the 89 EMA, I mean, this would have probably triggered some money taking here. You know, it ran, but over the long picture, if the 49 does not cross the 89, you stay long. Simple as that. Yeah, you're going to have a little bit of scary part here because it's breaking the 89, and you don't know how much longer it's going to go down until it pulls that 49 down above it. You could use some tighter time frame MAs to be able to time that a little bit better. Okay, so AGN I like for January. Next is URI, United Rentals. $13.0 and with a 14.48 move. Let's change this time frame back to 6 months. And let's get rid of the probability cone. And type in URI. So we can see that again. We're looking at a trend where it tried to cross, almost did right here. But it ran up to 119.83 and then pulled back down. So you say, well, Gary, let's take a look at a little bit longer picture here, see what it's looking like. Again, see the same pattern here, folks? This is a nice looking growth stock. And so we're going to play this thing upwards. And right now I see a good pattern developing to where this could be a bullish trade. Confirming that with seasonality right into December, I could say, well, does it have legs to even run longer than this into January? Well, definitely can run into the beginning of January, right? I don't know if it's this part here necessarily. See, that's kind of more of historical probability that goes down. So if anything, we want to take advantage of this big move here where it was the 13.0 and that 14.48. So let's take a look at open interest and volume. And I looked, and again, based on what I just showed you folks, that it did have legs to run into January. Now, you guys can make your own decisions on this. I would rather take a shorter pop off of this thing, take my money off, probably second week in December, as long as it continues this momentum. When I see this kind of momentum continuing, and I don't really see anything resistance up until this last high of 119, and by that time, if I'm choosing the 120s, I've already made money. It doesn't have to hit my strike price, but if it comes really, really close, great. So I was looking at the December 120s where there seems to be a really good open interest loading up. There's nothing on any of these other ones. And it probably is because when they opened up another month, you can see these are in $5 increments, 110, 115, 120. That's why there's no open interest and no volume. A lot of people would think that's squirrely because the market makers are screwing with things. That's not the case. So, I prefer that for $1.60 versus paying $3.10. Now, I believe for those of you that like to do a little bit more, like a bull call spread or something, You could do it on, I think I listed January's, the 115, 120s, and it's cheap, folks, $2.30. Oops, I'm sorry, excuse me. I played with this a little bit, and I did the January. I bought the January 120s. Why did I put down 235? I don't think this is correct. And I'm on URI, so... Oh, I'm sorry, that was AGN. The calendar, this was a calendar spread. That's what I was looking to do on this one. Because this was expensive, this is very simple, folks. Real simple. This is an option. You could do it or not do it, but it's very easy to do. And your thoughts should be going along this. Well, do I really want to pay $3.10? You know, that's $310 per contract. Gosh, I like to buy 10 contracts, but I like to spend less than $1,000. So how can I reduce that price, but still be able to get into that 120 in January? Well, I'm going to buy it, but I'm going to offset my cost by selling the December 120s. Simply hold the control key. Now I'm into it for $1.45. That's cheap, folks. I'm into the January 120s, which normally I'd pay right around $3 for. I'm into it for half the price, not even that. And as that thing goes up, right, the one I sold is going to go down. This is going to go up. And I could just drop that leg and let this one run all the way into January. Okay, so I listed that as well. That's URI. I also listed a bull call spread for AGN. I forgot to mention that very quickly. And that was the 220, 235s. January 220, 230. Why did I list 220, 235? 220. It didn't pull down, so maybe I meant. Nope. I don't really understand why I put 235. Because somehow I got 58 cents on that, and that is a mistake, so I will go back and try to figure out what I did wrong. So I'll figure that out. Let's continue. Win is another great looking trade, WIN. Wyndham Resorts in this area. This was under my November cycles, 100%ers. And there she is. 8/8. What I did, folks, so you know, I did weight this particular percentage move. I eliminated 08 and I eliminated 2012 to get my percentage move. I did not calculate based on 19.2. It was more like 6.1 because I eliminated the 52.5 and the 1.5. Because those to me are on the far end of each bell curve. So to smooth the bell curve out, I removed those to get an average. Even though Pete taught me I shouldn't, but I don't think the stock is going to move 19.2%. So let's go look to, first thing I always do to make sure it's even worth things before I ever look at charting is I look at volume and open interest. I want to make sure there's something there for me. And there is, as you see. I picked the December 82.5s for 80 cents. I like that. Because even if you use 6.1%, which was my average on 81.31, I'm going to use based on today's close times 1.061. That still gives me a target, of $86. I think that's what I listed. Yeah, $86.15, when I did the calculations. So that's plenty enough for me to stretch to the 80, in other words, not to stretch, but to be conservative and play it within that potential target. So then I will say, okay, that's cool. Now let me go to the charts, see how things look with extensions and so forth. There's win. I'm going to, let's draw in just a retracement, because this is 82. That's what we're looking for. So that's 100% retracement. If I went and looked at it a little bit further and say, well, what would it look like for extensions? And Bob, this bodes to your question. What time frame do you look at? What pullback do you look at? This is a visual thing. I'm looking at a particular trend before I see a pullback. Really, what I see, sure, I could start it all the way down here and say all the way up to here, but there was some pullback. So reality is this area here where it was range bound, I would probably pursue, I would take that low to that high to that low, and wow, it gives me the identical, literally identical to the Fibonacci retracements, except for this one. But the 61.8 is identical, the 100% is identical. So, and so is the 161, and this is a 138.2. So I know that historically I said, based on what I thought it could do, is 86.25, which is in between the 100%. I could add in the 1.272 or 1.236, which is in between these. I don't have them. I mean, I could add it very quickly and easily. In other words, I could add something right in here, which would be the 1.236 to say, what would it be between here and here? But you get my drift. I don't want to belabor that. So I like that. I'm looking at, another thing I was going to do and show you. So after I do fibs, I'm going to do probability cone to further strengthen my target prices. Okay? Let me get rid of one of these. Gosh, I've got more than that. Okay, so I'll remove drawing. Geez. Okay. Remove drawing. Okay. How does my fibs line up? Now this is just the retracement. If I did the extension, which I showed you before, it came right out to about 85. The other one was like 87, 88. But even if I just use these, and this is the first extension of a retracement, I know that's where it could stretch, 87, 87, and this is 87.22 in January. So that's real close as a probability of where that option, the underlying security, could run to and expire as long as it continues this bullish trend. So that's another, yes, one of the questions are the cones based on a 68% probability, which is what 68.27 is this one standard deviation. Yes, they are. I do not change the probability range. You can only do this in 2 digits. It will not do any further out other than 2 digits. So it's the probability range 60, which is very close to one standard deviation. The period of time I'll fluctuate depending on how far out I want to see this. And one of the things you can do if you're doing calendars is you can put it out for 180 days just to give yourself a snapshot of where could that security potentially be if it continues its trend, even though you know nothing goes straight vertically or straight horizontally. It's always going to zigzag up into a point where it will then pull back or retrace. So yes, the probability range is 1 standard deviation. I do change the periods of time depending on how far out I want to see those potential ranges of the stock. Okay, so when I looked at the 82.5s, I showed you that. Next is OC. Owens Corning. Very good company. And this also, I removed that anomaly of 34.4, and I removed the 2.7 divided by 6 to get my potential target, which really means that the software is even erring to it going further, and I'm being more conservative by eliminating the far right of the bell curve and the nearest to the x-axis on the bell curve. When in all reality, if I use those two and the 34.4, it would give me that kind of potential average move, of which when I remove those two, that's a lot less, which is what I used. I don't remember the exact amount. So next step for me is to say, gosh, good-looking historical move. What kind of open interest is there? Is it worth me to analyze this? That's my progression of thought that I go through. And I immediately look at January and I see great open interest and some good volume today. Then I'm looking immediately at prices at cheap or expensive compared to the underlying security. Where is my delta at? Subtract away my theta, which gives me my true option movement. 47 cents per dollar movement is pretty strong when I'm only paying $1.20 for the actual option. Cool. Next is charting. And I don't like this trend. However, what I did do is I went to a 2-year time frame. Do you see this here, folks? Here, let's do this. This is, where is it? Right here. See, it kind of bounced and then it just kept running into December or into January. This is the move I want to take advantage of that it did last year. And it also did the same thing. If I go to 3 years, this move right in here, that's the other move. And again, it's right around the same time. Here's the 19th. And it retraced a little bit and then just took a run. So I'm hoping that's what it's going to do again this year. And if I just look at a 1-year chart, again, it paints a different picture. Not a real rosy picture, but I see it pulling up. And this is really tugged on these two MAs. So here's 46.64. What did I put as a target? I put, let's do 6 months. And hold on, I did 1 year. No, that's not how I did it. I forgot how I did it. In any case, if you took the average move and you took out the highs and the low and you took that statistic, I think it was 3.9% thereabouts, as I recall. And I just went to, and again, this will at least give you an idea where it could potentially be at the close of December's expiration, where it could be at the potential of January's expiration if it continues this bullish run. I mean, I could just do retracements to make it real simple. And say, okay, a 50% retracement is $37.50. And the big one, the 61.8, which I normally use, is 39.30, 39.63. So if I look at what the stock price is, 36.80, puts me to about 38.26. So I like the 37s, which is, I'm sorry, the 30. I put December 36s at the money with a 64 delta and 1962 volume. That's what I put for OC, and the cost of that is $1.35, and that's what I listed. You guys want to stretch a little bit and go out to December and get the 37s, that's fine. That's absolutely fine. And you've got some good confidence in doing that just by the probability cone, right? I mean, there's the 50% retracement at the 37 in January. So if you want to buy some time, go out to January and do one strike further out, and you've still got a lot of open interest and volume, and you're not paying that much. As a matter of fact, you're paying less than at the money of 36, and it's at 36.80. As a matter of fact, I'm going to change things right now as I speak to the January 37s. I like that actually better. And I can get that for $1.20. I like that better than spending $1.35. Sorry, I'm making the change as we speak, so it's there. All right, that's OC. GRA. W.R. Gracie, good company. Nice move. Again, I removed the anomalies of 53.5 and 0.4 to come up with an average. Looked at open interest. And I looked at January 100. 29 delta. Very good open interest. Decent. Not a lot of volume today, but good enough. And that's only $4 away. Gives me 2 months to get there. So December's potential is 192, and January is 103. Gosh, I thought I had fibs on all of this stuff. That's not how I did it. I think because of this trend going down, I could have done, you're supposed to go finding a trend upwards and then where it retraces to, but not all the way down to here. So in this case, this doesn't. I'm sorry, folks, I'm a little bit tired here. This was supposed to, maybe I did a retracement of something of that nature. And that's what I look for is just when you run it up and then run it back down. And then you look, where does this line up? There's a 61.8 with $100.03. This is $100.92. There's 103. There's 103.8 for 100%. That right there, coinciding with probability cone, is a great technique to use of your target prices. Now you have 3 confirmations of where potentially this stock could go to. And then if you use the best choice and you remove those anomalies, you get your average, multiply it by the closing price, and see how that lines up. So GRA, I picked the 100. Next is, this was an interesting one. I never heard of this. LEN. Oh, Lennar. Sorry. Of course I have. Building company. I did not form fit at all. I used the 11.32 average. This jumped out at me, 36,000 contracts. Somebody got some deep in the money at 42s. Paid $6.05. I don't see the same on the other side. I do see some major volume right here. Now that could be people selling this too, don't forget. But probably not, because if they were selling, they'd also be buying on the other side or buying here if they were still bullish on it. So it's not a bull put spread, let's put it that way. But what I did see is the January 49s, and that's what I chose with 6,000 open interest, only because I do believe in seasonality. So, and I got a 40 delta, and it's inexpensive at $1.28. Target would be $52.87. And I think I lost all of my fib. Yeah, I lost all of my fibs for some reason. I don't know why. I had fibs on all of this stuff to where all we would have had to do is click on that. We would have been able to see that of where the extension is. And the extension was up here in this area. So 51.33 for the Decembers and 53.06 for Januaries, and the probability cone, which puts it well in range of the 49. For inexpensive on a $47 stock unit, you're paying just under 3%, about 3% premium, which is good enough. You're closer to the money. So January 49s. Now I put 1, 2, 3, 4, 5 ETFs, folks. It's 457. Let me just go through maybe one. And remember, this is a time where a lot of people dump money into ETFs. VNQ, the Vanguard REIT, DEES 80s for 65 cents. And all of these, just so you know, are 100% historical. With profits of 4 or 3.5% or higher. XLY, again, not big moves, folks. You got to play closer to the money, right? Or buy time. That's the only other thing you can do. 4.10%. I like that. 4.10 put me right here at the 72s. Yeah, XOY, January 72s, 51,000 open interest. I like that. And if you did the math of 4.10, it puts you above that, like 73. And matter of fact, the target, I should just be reading this because I already wrote down 73.66 is where the target is. So 72 is good, 100%. Only paying 70 cents. I like that. The other one is the inverse of the S&P. I'm sorry, not the inverse. This is the ultra of the S&P, and we all saw on Best Choice where the S&P can run. And I had a target of $140.34 on this thing by January. If you took out that anomaly and took out that anomaly and took an average I think it was like 4%. And so it runs, actually no, I took the 8.26. I took it all, including that 08, which is really an anomaly. I should have removed those two, which really puts it more like a 4% move. $134.91. So 130s is plenty in range for that, which is what I looked at for December's, the December 130s. This is the only one that was a little bit pricey. Now you could buy some time and go all the way out, but that's even more expensive. The only other way is to do a calendar and buy that and sell that, and now you're in it for $1.55. So now you're into the January 130s, you bought it, and then you sold to offset the cost of 415. You sold the Decembers, and now you're in for $1.55, which is cheap. The last one for a put is the inverse of the S&P, the Ultra Pro Short. And this is a no-brainer, folks. The December 35s for 25 enormous cents. And you can see with the SPXU that this thing just tanks its way down, actually just continues all the way, probably the end of the year. I mean, it's 100%. But all I wanted was this part right here, which, look at that. Nice moves, folks. Really nice moves. So I don't even think I did that much. Someplace on here I found the SPXU. I don't remember where it was. Maybe it was under the largest volume cycles. Nope. It was under assets. Nope. There I found VNQ. There it is. That's in January. Hold on. I thought I had it in here, SPXU. There it is. So even if I just use that little amount, 7.31, subtract it from 1, get my factor, it would put me below the 35. Actually, I think it was a little bit more than that. So anyways, for 25 cents, I think the S&P is going to continue to rock and roll. This thing only makes money if the S&P goes down. So in other words, it goes up. So I like that for 25 cents. All right. It's 5:03. Does anybody have any stocks they'd like me to go over? I'd be glad to entertain those now. For your edification, Bob, I will go over one calendar spread that I found that I do like. And this one is specifically for you or for anybody else who likes to trade calendar spreads. OHI. And I see some people go a little bit further out of the money when they do calendar spreads on the bullish side if you think the stock is a growth stock. I don't do that because then it makes the trade bias towards my my inclination, and the stock has to move in that direction. I like to play the odds of 50-50. That's how Pete taught me. That's why I only look at the money and try to buy 6 months' time. So in that regards, if you set your spreads to the max covered return, I see really good volume on the Decembers, 3,800 open interest, and it's a 92.59% premium somebody's willing to pay for those December 40s. If I go out to June, I have enough open interest, not a lot, but I'm sure this will pick up over time, and that's only 14.68. The different premium spread is 77.21, and I think most people would like this. If I bought that 40 and I sold that, I'm paying 65 cents. It's cheap. Cheap, cheap, cheap. It's not even 2% premium. So that's the only calendar spread I liked with the good premium spread. Somebody put in TNA, the ETF, and that's a nice looking run. Did we have that last time? Did I put TNA last time? No, I didn't. I did not put TNA. So we will put TNA. Thank you, Leon. That's a good one. Let's just use whole rating. It's 17.66, real nice consistency. I'm going to use that. Let's see what kind of open interest it has. Well, kind of spotty. What's January look like? Well, January looks a little better at the 80s. Oh, why didn't I list this? I evidently already analyzed this for some reason. I don't know why I didn't put it down. Yeah, I like this one. And so you see just 100% retracement is from its high is already 85. So if you're looking to buy some time, you can buy the 80s. It's expensive. That's why I didn't list it, Leon. I was trying to keep everything under $2. And unless somebody likes to do calendar spreads, that's the only way to mitigate this premium down to something that's affordable. Oops. $1.91. And still, for $1.91 on an 80-cent stock, I'm still paying, you know, a little, well, it's 2.5% premium. It's not bad. But still, if you have the cash to be able to play this, folks, it's not a bad trade. Let's see if I buy some, we'll go out to 25. If there's anything else happening out there. Nope. And stretching all the way to the 85s. Well, you know, you could. You absolutely could, because it's a 17% potential move. And this is on the small cap. And that's, you know, day after Christmas is when you want to start getting into small caps. You know, before Christmas is large, after Thanksgiving is small, and that's where you can run, and that's what this takes advantage of, is the bull on the small. So you could go out and buy some time. I don't know if I'd stretch to the 85s. I would probably come in a little bit closer. I guess I didn't look at this on a longer time frame. I need to close that. I was selling that. I see resistance. See, if I snapped a line here, Leon, a price level right there, you can see where there's some resistance, right? Ran up, touched, ran down, ran up, touched, ran down. So it needs to break about $79.20. If it breaks that, then I'd be more interested in taking a longer shot at 85 in January on that. Because the next one out is April, and that's too expensive. But it's a good one. I'll list it. Any other stocks, folks? Alrighty. Oh, I'm sorry. Somebody didn't ask me a question. What is the probability of the top linear line being resistance? It's not really resistance. I don't look at linear regressions as resistance or supports because they will move with price depending on what time frame you're looking at. Typically resistance, you need to snap a line and visually be able to see where there's resistance and where there's support. Learn Fibonacci, it will help you. This is what people use a majority. Either that or they'll use the last high or low as potential targets of retracement to the last low or an extension to the last high. That's how I trade my E-mini every morning. And I look at the daily high or low, the overnight high or low, and inevitably it's going to try to stretch for one or the other. Won't always reach it, but it's going to move towards it. It's going to try to reach for it. And that's typically the ebb and flow of a stock as well. So, but Fibonacci will also help along with just adding the probability cone, which further will help you to decide where a good strike level will be if you're in line with that strike level. For example, December's it's saying 88.59, it's saying January 93.19. This is saying 101 based on an extension. So linear regression I do not use as support or resistance though. They tell me more if the stock and security is overbought or oversold. That's what the linear regression tells me. Okay, anything else? Alrighty, folks. Appreciate you stopping by. We'll email this to everybody shortly. Good trading to everybody, and I wish you and yours a very, very happy and wonderful Thanksgiving. Till next time, good trading.